Hi, this is Keith Schneider, CEO of MarketGauge.com, and it's July 17th, 2022 edition of Market Outlook. So, interesting week. Equities sort of ignored some additional negative news regarding inflation and actually rallied the last 2 days, easing up on some of the losses for the week. Let's take a look at the charts and see what they're telling us. So first of all, one thing you can see is that we're sort of poised under the 50-day moving average in the weakest index. That's the Qs. However, on a shorter term basis, they're basically taking out an important swing high and paused just under the 50-day moving average. Now, the other thing to note is if you take a look at real motion, we're actually above the 50-day moving average of real motion. So it means momentum is actually improving on the Qs and doing better than price, which is a positive sign. Momentum often precedes price. Now, the S&Ps here, actually it's now touching the 50-day of real motion, but still quite a bit below its 50-day moving average. So looking a bit better, certainly rejecting the oversold readings in mid-June and still in a bear market, in a bear phase, but definitely looking better here as well. Now, the other thing that's interesting, the second worst performing index on the year is IWM. And interestingly, it has a similar pattern to the Qs. So a lot of the oversold indices here are showing an improvement because we've got a price action below the 50-day moving average. However, real motion above. So net, you could take a look at these charts and say we're definitely improving on a short-term basis. Longer term, of course, can't really argue with the fact that we are in a bear market and we may get a rally here over the next couple of weeks into August. Okay, now moving on to the weekly charts is another interesting pattern that we should be paying attention to, or two things, which is number one, we really should clear the 200-week moving average in IWM, and we're sitting right on it. So net, if we clear that, that would put it back into a much more positive mode. The other thing that I would watch is clearing the 10-week moving average across the board. You could see right now, that's the magenta line. We are under it. Same thing here in the S&P, just sitting right beneath it. So if we could clear those 10-week moving averages across the board, or at least 2 out of 3 of these indices, that would also confirm that we're about to embark potentially on a short-term bounce in the market that could get some decent traction. So pay attention to those levels as well. Remember, these charts are updated on a daily basis, so you can always come back to big view. Okay, now moving on to volume analysis, what's interesting is we definitely got a mixed read, but overall some important improvement as well. And if you take a look at the NASDAQ here, 100, you can see we got 3 accumulation days versus 2 distribution. So that's pretty good improvement. And you can see we were down across the board all week, and that was despite some really good performance over the last 2 days in the NASDAQ. Okay, so now taking a look at sectors here, what's interesting is that semiconductors actually led the week up. There's some legislation that's being proposed that will definitely improve production of semiconductors here in this country, and net you can see semiconductors up 2.9%. that is definitely a positive read on riskier assets. Now, the other thing that's interesting is that utilities down 0.1%, basically flat, and consumer staples up 0.1%. So definitely doing better than the market. Overall, what I would call this is a mixed read, but considering the strength in semiconductors, I would definitely lead to a more positive overall look at sector rotation for this week. Now, looking at market hotspots, more of a global macro read, it's interesting to see some of the patterns here. First of all, natural gas basically exploded back up, right, over the last 5 days, up almost 18%. Now, on the flip side, look at oil services, and that was down almost 8%. So you want to talk about a confusing mixed read on inflation. This is it. So you can certainly make a case for inflation resuming, especially considering that energy is a key component for the economy. However, parts of the energy complex definitely doing lousy. So question is, which way is it going to resolve? And you can easily make a case either way. Now, the other thing to note is that lots of issues in China. And you can see China down over 7%, almost 8%. And that is some banking issues, some real estate issues across the board, and putting pressure on China. Now, of course, if China continues with this type of downward pressure on equities, it's going to be pointing to potential further downward movement, and that would put pressure on the global economy as well. So net, not a pretty picture out there. So again, sort of a mixed read. Now, the other thing to note is that TLT's U.S. bonds were actually up 3% on the week, ignoring all those inflationary pressures and a lot of bad news on the economic front. And of course, the fact is that shorter term rates moved up and longer term rates moved down, pointing to an inverted yield curve, which is also a lead indicator of a recession. So that's not a positive sign at all. But with that, again, the overall technical case for the market looks a little bit more supportive. And the fact is here that with bonds actually easing on the week, it could mean that the Fed is running a bit too rich here, and what the market is saying that the Fed is going to have to back off its super aggressive stance. Let's see what happens. All right, hope this all helps. Good luck with your trading, and bye for now.